What is going on, everybody? Merry late Christmas and happy early New Year's. All right, let's hop in right in the video. Right, I hope that everyone had a good break. I know it's not over, but for me, technically, it is. I hope everyone had a good break. I hope they're still enjoying their break if they're still on break. And I hope you guys had a awesome time, hanging out with family, friends, whatever it is that you guys did over break. Anyways, we're gonna take a look at this week because today's Thursday and we're not quite over with the week. The kind of the trade idea that we had, the bias that we had, the over kind of weekly bias, and then the trade that we could have taken on Wednesday slash Tuesday. So yeah, let's go over it. So let's look at the weekly bias. Just like to start with that. As we know, all-time highs or major highs, all-time highs are right up here for SPX, at least for the time frame I'm using and the indices that I'm using here on TradingView. It's literally marked right up there. We are not even, I want to say, 1% away from, yeah, maybe less than 1% now from reaching all-time highs. So as you can see, SPX has been on 1, 2, 3, 4, 5, 6, 7, 8, 9, basically on its ninth week of straight bullish uptrend and price action. So why would it stop now? Okay, why would it stop now? This blue line here, as you see, is not a weekly PD ray. It's actually a daily PD ray. It's above this daily fair value gap. And I just marked that high because that's the last high we'll get before this major all-time high. I just want to mark that because I know that's important. It's not a swing high, unlike this one, but we've already passed the consequent encroachment of this fair value gap. We've already traded right through that, as you guys remember in the previous videos. So that's not important anymore. We've traded all the way through that. We've swept the fair value gap. And now the next big target, which we actually hit today, was this high up here. That's why that's the blue line, and that's why it's marked. Okay, that's so just so it's not confusing for you guys. All right. Same on the daily here. We had very strong uptrend. We had this this right here, this candle. We all know what happened here. There was that on Wednesday. There was that kind of unexpected dump. I'm pretty sure the market makers, even on Wall Street, were saying, like, they interviewed a few people. They were saying, like, no one knew why that happened. It just dumped. It just dumped that whole day. Now, if you really take a look at it, it dumped, but did it really affect the market much? This whole range right here was not affected at all. Did not even come into the discount area. So really, there was no worry for this to come even, more down or anything like that. But the play here was to actually take a trade off of this to go bearish even more. But the problem I realized a bit too late was that there was no market structure shift. And that might sound incredibly weird, but there was no market structure shift when this candle was created. And I'm looking at the daily, but if you're looking at the 5-minute, maybe on the 5-minute, there was a market structure shift and there was a reaction off that. But that was this candle right here. And remember, we almost tried to take a trade out of it, right? Which we did up here. If you guys remember, the video, I should be the video right before this one. That was the trade we took on Friday, right? If you guys remember it. And then what happened is that we just kept buying our way up, right? So that was the previous week high that we created there, right? That swing high. We took that out on Tuesday, right? Do notice that there was no news. There was no news this whole week. I mean, there is news, but there's no high impact news and there's no orange folder news. So there's no big kind of momentum price action movement news. Okay, nothing like that. So yeah, big bullish move up on Tuesday, and then let's actually drop down into the 1 hour because I do want to go over this. So what I was looking for, okay, yeah. So let's go back in here. So Friday, right? This happened. The move down. This happened. Friday happened. Boom. And then we kind of buy our way back up. We consolidate almost to these highs, consolidate. And around here, I'm looking for some kind of market structure shift, right? Because we're now going, it's bullish. Now it's bearish. I'm looking for this particular swing high to be broken. And this was on the 15-minute. But as you can see also on the 1 hour now, it's also a 1 hour market structure shift that is happening here too. So 2 time frames confluencing like that is pretty good. We also have this swing high that also gets broken through, or almost actually. It doesn't get broken through. It gets traded through, but doesn't close get above. But I analyzed this, when was this? Tuesday, Tuesday morning, right? We saw the break of structure on 9:30, around those times. So I was like, oh, this is perfect. This is my strategy and it's perfect. It's going to work, right? And so yes, it did. So the first thing I did was draw the standard deviation. And if you noticed, I've had this for, if you were in my Discord, you would have noticed that I had the standard deviation from like literally the day I have it here to now. I have not moved it. And the reason why is the standard deviation sometimes lines up so perfectly with some things that I can't take it away. For example, right here, right now, when I drew it and we didn't have any of this price action before, all I saw was this. And when I saw that -4 being so close to that, you know, the high above that fair value gap, close to the major high, when I saw this being so close to the major high, I knew that price would want to come into this. I knew that it would want to sweep that liquidity, not only because the weekly and daily bias are bullish, both bullish. Monthly bias is also bullish. We want to take out that all-time high. So it's obviously going to be bullish. The fact that standard deviation is acting in a way where it's so close to this, right? This is the last move. Like this consolidation is the last tiny move that we have before this huge expansion. And this last part of consolidation on the standard deviation shows us that the market structure shift proves that this could lead to a -4, which is basically, right, this liquidity up here. And as you'll realize pretty soon, right, you'll notice these candles here start hitting the -3.5. I think that was pretty neat. What else? There's some areas of rejection, not too much. I mean, this was literally, you know, -1, boom, that stops that candle. It's not much, but it, you know, it's there. So yeah, that was that. So I drew that, right, to take the trade. I was like, I need this to be validated by a high time frame PD array. Now we didn't quite get that. All we got was like a major kind of sweep of tiny liquidity down here that I noticed, because this candle, this was the swing low on the 1 hour that created this expansion move up. And for my strategy to kind of be valid in these terms, I need this swing low to be validated by some kind of fair value gap, some kind of order block, maybe liquidity, any kind of high time frame PD array, and I rest those on either the daily or like the 4 hour, right? I know I've said weekly, but the weekly here, you can't really find any PD arrays for such a small move like that. So I just based it off liquidity. This was kind of weak, right? I'm not gonna lie, but you could also say it was like an order block here, right? Oh, like this order block before the move up, but this was consolidation, so it was. I didn't really want to count that, you know, but it is a swing low, swing high. You could say that, right? I just based it off this liquidity. Anyways, we get that market structure shift. To me, this is a valid setup. So what am I doing? What am I looking for, right? What I start doing is, I'm pretty sure I can go back to the 5 minute to go, you know, I didn't take a trade on this day, nor any other day of the week yet. Gotta wait until tomorrow. What I did first was I took the OT here. Okay, so let's actually delete this just so it's out of the way. As you can see here, right, clear market structure shift. I had it up here, but this was not a swing high. This is not a swing high. That's a swing high. Okay, just for reference, this high here is the same as this candle's high. So there's no swing high, right? It's just the same high. This is a proper high. So what happened? So yeah, market structure shift happened, swing low, right? The original swing low that created this. Usually I draw my standard deviation just so I know where that swing low is, so we can draw the OTE. Take the OT, right? So from, I don't know why it's not on locks. From this to, you know, moves up. So that's the first swing high that I create, right? And what I'm looking for is to re-enter off the OT, right? Because I want this to be like a move up and then a move down. So I'm looking for something like this, right? I'll recreate it right here. Accumulation down, hit the high time frame PD array, then we kind of, we sweep the market structure shift, we come down and we come up, right? And this is where I'd enter. I really bad drawing. I'm sorry. So we kind of get that move down here. And I did this live. I watched it live. Everything was live. Price action was live. I watched this 9:30, right? Opening, very bullish. Then we get this night drawdown, right? And I drew my OT. I'm like, okay, well, I need price to come down into this range, okay? And I also draw an OT like this off this swing high, okay? Of the swing low and swing high. Now, watch what price does, okay? It comes down into the discount of this range, okay? You agree that there's the discount from the swing low to the swing high. This is a internal range that it has just created. It comes into the discount, doesn't come and hit the OT, so I can't take a entry. Hits a discount and goes, and it just goes from that, it just goes, and then it reaccumulates, right? Reaccumulates here, comes up, comes down, and it does that. Okay. Now, is there a way that I could have missed my entry? Yeah, but this wasn't on me. This was on the market. That sounds corny. It was actually on the market. The market caused all this, and I didn't take my entry because of the market. No, it's because my strategy is I can only take a position when it's around this area, when it actually enters this golden zone, right? Golden zone, or even ticks it, or if there's some kind of PD rate in this. So I was like, oh, there's an order block right here. I would like to see price come down into here, hit this order block, and I'll take my entry off there. That didn't happen. So I was like, fine. I'm used to this. I can wait for price to come up and create a new swing low, or swing high, my bad, and then kind of come down and hit my OT again. That's fine. I'll do that. I'll wait it out. So I did. So this swing high gets broken. New swing high gets created. So you do the same thing, right? You're like, oh, swing high here, boom, extend it out. Where does it now? Now it's still here. The OT just kind of moved up. Price comes down, doesn't quite get in the discount. It kind of just, comes all the way back up. All right, fine. I guess we'll wait even more, right? And this is all Tuesday, 1 p.m., right? And then it makes swing high, but there's no break of structure, right? There's no big continuation down. There's no break of structure. So you just kind of keep going. And the highest high is this. So on Tuesday, right before market closes at 325, we make this high up here, which lines up with the negative 3.5, like quite literally perfectly. Just letting you know, standard deviation, right? So we do this. So now this is our OT. Notice how big the move is. Okay. And so now I draw this. So now there's an order block. So if price wants to come down, we can reach this order block, and that's where I'll enter. Okay. And notice, please do notice, at this point, anyone would be thinking, all right, it's over. It's basically like already at the 3.5. It's going to go to -4. I can't take a trade, which, is reasonable to think. But then I just waited. So, consolidation, aftermarket, pre-market, chops around Wednesday, right? Wednesday, we get this pretty big move up here, which is also basically the -3.5. So again, this is our new OT, the new swing high, because it's a little bit higher than that. Okay, so that's our new swing high right there. The OT, where is it drawn? So after this is due, we come all the way down. And I saw potential. I was like, okay, maybe I can enter off here, because it just dumped. And I'm like, okay, cool. It's going to come down to here. There's a fair value gap here it can hit. There's an order block. I'm ready to take my entry. And guess what happens? Nothing happens. Okay, it starts reversing. Okay, and at this point, I'm left to wonder, what have I done wrong? Okay, and I remind myself the week is not over. Okay, it's not quite time to quit, because again, Friday is still upon us to come. Price got near, right, but it didn't quite get lower, and I would have liked to see this get lower so I could enter and go bullish, because I know its prices wants to go up here. So I waited. Okay, and then I kind of drew the fib, and I was like, all right, what if I switch this to like, the first thing I had was this 1 minute fib, and so I drew that. It lines up with my levels. I'm like, that's interesting. If we do, I don't know, this is just the normal fib. Boom. Okay, doesn't quite line up. Range, this is just the range of it. Mean threshold. Okay, so this whole range from that swing low to the swing high, the whole range of it, it's in discount. So what does that mean? If it's in discount, we can buy. Okay, so if we're in discount and we buy, we can start buying all this, which makes this move up validated, right? That's the mean threshold. We got OT, V2, I don't use this, standard deviation, and just no normal fib. Again, discount, we're almost at that zone. But the one that impressed me was the 1 minute fib, right? So these are tiny levels for the dedicated to the 1 minute, and it just barely swept that 0.59 level. So that was interesting. It's also right in the middle of that negative 1.5 and negative 1 level, like quite literally in the middle. When you draw a box, it's literally the consequent encroachment of that, which I think is pretty cool. Anyways, I'm going to keep it on the OT, right? And Thursday, right? So we come in Thursday, boom, or Wednesday, my bad. Wednesday aftermarket. We sweep that high, okay? Kind of come down. Thursday, we're around here. We come again. The highest high we made is this one up here now. Notice that's the new swing high. That's the new high, okay? So now we can delete this order block because it's off this OT. And now all we have to do on Friday, and this might be a little unprofessional, or maybe, you know, it might not happen, would be for price to come all the way down and hit our OT, because it's already got all the way down here, so we can do it again, hypothetically. And if it comes all the way down here from here, it's got enough momentum to come all the way down here. Yeah, so like I was saying, price comes down to the OT, we can take our entry there. It's already gone down here, so hypothetically price could dump down here and go a little lower, react off of this, and be good, right? So after this OT gets taken out, the only target it has to do, we've already gone through the -4. So at that point, my strategy would not be to target standard deviation at all. It would actually just be targeting this major high with maybe I want to say either a 1 week or a 2 week call option. You know, I wouldn't do anything like a 3-day call option, because it's definitely going to take more than 3 days to get up there. Actually, maybe not. If this took a day, this could take 2 days. If 2 days to 2 to 3 days, probably, I would say. But yeah, that's the move. That's the idea. And I guess we're gonna have to see, because on the daily it looks kind of like it looks promising, right? I'm gonna say the least of it. It looks promising because we've had this bullish move up. Displacement almost creates a fair value gap here, but it doesn't quite. You have the OT right there, right under that low. It would be very pleasant or whatever you want to call it, to hit that liquidity, to create a doji, which we're about to do, and to come down, to sweep this, and to buy back. I think that's reasonable, because look what we did. We sold off, we dumped, and we bought everything back. No wicks, just bought all the way back. So this could be very possible in just one day. So body closure all the way down here, we buy it all the way back. I'm willing to do that. I'm willing to take the risk. Personally, if nothing works out today, then that's fine. I am trying to find more, like, I know this happens on the lower time frame. That's what I did here. You know, this happened on the 15-minute time frame, and look, now we're up to the daily, drawing fucking standard deviation and you know, trying to find entries on the fucking hourly. So just from this 15-minute hourly market structure shift, we've created this huge entry model and fucking, you know, daily buys type shit. So lots of stuff going on. You know, you always try to find a trend, and if that trend happens, you mark out the OT, you enter off the OT, and you target standard deviation from -2.5 to -3.5 if comfortable. Leave a runner to -4, and if not, higher. So that's the strategy. I have everything in the model resume in my Discord. If you guys want to join, it's literally the link in the bio, I'm pretty sure. If not, go check out my TikTok at Tristan French, or French Trades. I can't remember which one it is. Yeah, but I'll see you guys either tomorrow, right, or on Monday. God, we have school. Jesus Christ.